If you're in crypto, you've probably felt that knot in your stomach lately. The market's been choppy, right? Anxiety is high, and it's so easy to feel like you're just lost in all the chaos. But what if I told you there's a predictable pattern behind all of this? A psychological playbook that once you get it, it can change how you see everything.
Yeah, this number probably looks pretty familiar. It's that recent correction in Ethereum. A drop that felt, kind of sudden and really unsettling for a lot of people. It's exactly the kind of move that makes you second-guess your entire strategy.
And this is the big question, right? The one every single investor has to face. Is this just random chaos that should make you panic and hit the sell button, or is it a predictable, almost scripted event that you can actually prepare for?
Okay, let's really dive into this, because the core idea here, the big takeaway, is that these market corrections, they are not accidents. They're not bugs in the system. They are, in fact, an intentional, built-in feature of the market cycle.
Think of it this way. These dips are a part of the game, a totally predictable part. They're specifically designed to test your conviction, to create doubt, and to basically persuade the weaker hands to sell their positions right before the next big move up.
And look, this isn't just some theory. It's an expected pattern. This quote really nails it. Big, scary drops of 20, 30, even 40%. They're not just normal during a bull run. They are a required part of the process. They clear the deck for much higher prices. So how does this whole psychological game play out in the real world? Let's look at a perfect example from the last cycle that makes this whole theory pretty much impossible to ignore.
Okay, this is not just a chart. It's a story of emotion. Solana starts with this slow grind up, which causes a ton of impatience. Then, bam, the massive shakeout. A brutal 66% drop from $60 all the way down to 20. This is the moment where most people panicked and sold. But for those who understood the playbook, what came next was an absolutely explosive rally to over $250.
And here's where it all clicks. You can map that price action directly to human emotion. It starts with that impatience, right? Why isn't this thing moving? Then comes the big dip, and with it, just outright panic. It's over. I gotta sell. And finally, as the price just rockets past the old highs, regret and FOMO kick in, causing people to buy back in at the absolute worst time. The emotional journey is always the same.
So how do we use these lessons? How do we not fall into those traps? Let's build a playbook for navigating what's coming.
All right, rule number 1 in the playbook. You gotta know what to watch. And while Bitcoin gets all the headlines, for the rest of the altcoin market, Ethereum is the true compass. It's the admiral ship that leads the whole fleet. Its moves are what tell you what's likely to happen next across the entire ecosystem.
And the difference between them is actually pretty simple. Bitcoin is like a store of value. It's digital gold. But Ethereum is the functional fuel for the whole ecosystem. It's the digital oil that powers all the dApps and NFTs. That real-world utility is exactly what makes it such a powerful leading indicator.
Now, there's a fantastic analogy for this. You don't try to eat strawberries in the winter, right? It just doesn't work. Successful investing means you put your money where the growth is happening right now. It means identifying the current season, whether it's Bitcoin season, then Ethereum season, then altcoin season, and you rotate your profits from one to the next as they peak.
This, though, requires some serious emotional detachment. You have to start seeing your assets as tools, not as treasures. Their only job is to increase your capital. That's it. Once an asset's season is over, you thank it for its service, you take your profits, and you move on. Do not fall in love with your bags.
But here's the thing. Surviving the dips isn't the final test. The ultimate challenge, and honestly where most people fail, is surviving the sheer euphoria at the peak of the market.
This is without a doubt the most dangerous part of the cycle. See, for the last couple of years, the market has trained you to be cautious, right? To believe that every rally is just a setup for an even bigger drop. But soon, the bull market is going to train you in the complete opposite belief, that every single dip is a gift, a guaranteed opportunity to buy before the next massive surge.
And that shift from healthy skepticism to just blind overconfidence, that's where the majority of bull market profits are completely wiped out. The market will reward you for buying the dip again and again and again until the one time it doesn't. And that's when the switch flips for good. And this really reveals the most important skill in a bull market. I mean, anyone can make money on paper. That's the easy part. The real challenge is having the discipline to actually sell and turn those paper gains into real profit. Because let's be honest, profit isn't real until it's actually in your bank account. So I'll just leave you with this one last thought. When the music is playing loud, when the headlines are screaming about new all-time highs, and when every single person you know seems to be getting rich overnight, are you going to be disciplined enough to follow your plan and actually sell? Or will you get trapped by the euphoria just like everyone else?